Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. We're going to go over Twitter. We're going to go over some information about commodities, what's going on that other people are talking about in the Twitter space about commodities or stock market related. I'll give you my financial opinions as we go through it. They're just my opinions. And again, I've been in the market since, 2004 or 5, somewhere in that range. Gone through the last end of the commodity bull market. I didn't see the beginning of it. And then I went through the big disinflationary period between the last commodity bull market of 2008 top, 2009 bottom, all the way till I'd say about 2020. And I did get in a little bit before 2020. I was starting to buy platinum in 2019. I was buying silver in 2018. There was a bunch of different things that I was looking at. I did buy the bottom of gold in 2016. I actually traded that little area from end of 2015, early 2016, somewhere in that range, if I can remember right. Rode it on up to the summer of 2016. And then I went down a little bit, and then I sold out. But I've changed my strategies a little bit since then. More of a buy and hold, ride it through this entire commodity bull market. But there were some crazy entry points in 2016. I even think Vale was down to like $2 and something cents during that time frame. Would have been better just to hold on. And again, the thing is, I should have held longer. That's like it. It's like I should have held longer on a lot of my investments. But let's go through here. Let's take a look and see what's going on. There's a lot of news out there that I'd like to cover that might explain some of the movements in oil and some of that. If you want to follow me, you can follow me at @finding_finance. Go ahead and you can shoot me messages too, guys. You can do messages. You can shoot me a message if you want, or follow. Now, we've got Fission 3.0. Fission 3.0 hit something big. It says this is huge. FUU's ultra high grade uranium discovered is in a wide section, 15 meters thick, starting just over 250 meters deep, which is very shallow for the Athabasca Basin deposit. This is what Baseload and Standard and others have been searching for. And they drilled this hole. I guess the counts per second were over 65,000 in certain portions of the area that they drilled for this drill hole. And it's very close to the surface. So Fission 3.0, I know it was up a lot today. But this is one to be looking at. And they've got more drilling coming out. And what they need to do is they'll drill, they'll hit something like they did, and now they have to drill like heck to define a deposit. Now, with this information, they know something's down there. They just don't know how big it is. These are the types of plays that I usually like to go after. Is after they hit something, they get some positive feedback. The stock will run up quite a bit off of this news. And now it may come back down. It may kind of settle out a little bit. I don't think it'll just go to the moon. I mean, maybe it will, but this is one that I am now following. And it was on my radar before, but this is Fission 3.0, and they have positive indications of something down there. So they've got a discovery. Now they have to figure out how big it is and define that deposit through further drilling. The major commodities bull market over the next few years will not necessarily be driven by higher demand, but rather by lower supply. This supply-demand gap on the back of years of underinvestment globally in new projects will light a massive fire under the commodity space. I completely agree with everything that Yellow Bull is saying in this. Here, it's going to be based off lower supply, and I'm going to take the opposite almost and say that demand will be destroyed to meet that supply at some way higher price level. I mean, that's really what it is. And I think the Federal Reserve knows that, and that's why they're raising interest rates, and they're going to stay on top of it, on top of increasing rates to a level where some of this demand kind of comes off. And I think they're trying to more slowly ease the markets into the demand supply balance than kind of hitting it, having prices get hit pretty hard to the upside. So I think that's their whole plan, if they can do that, to balance that all out. And I think it's going to be a tough balancing act. Here is Happy Hawaiian. It says down to only 143,000 ounces of platinum left. And platinum keeps getting drawn down. It seems like, 2,500 ounces or so each week. And if you were to maintain that type of pace, let's just see how many weeks before we have an issue. And so if there's 143,000 ounces divided by about 2,500, that gives us about 57 weeks. So that's about, about a year's worth, a little over a year's worth going on there. So yeah, it's getting close, guys, and these inventories are drawn down. Platinum is one of my favorite metals. Now, someone had asked me, and I'm going to kind of go into this real quick. They asked me about like the levels. How do I swap metals, the levels, and all that stuff? I just identify when it's really cheap, and platinum's cheap against all of the other metals on a ratio perspective. It's cheap against palladium, gold, and silver, and it's very cheap against all of those metals, like anomaly style cheap. So this all was born, I would say, from Dieselgate, the reduced demand for platinum. Platinum's usually found in diesel catalytic converters, and palladium's found in the gasoline catalytic converters. Now, we've had some substitution going on because of the price differential between palladium and platinum being so cheap. So we're going to see substitution. It takes some time. It's not immediate. And whenever I've seen the metal, any metal, be cheap against all the other metals, and you're very patient with it, they seem to do very well over 4, 5, 6, 7 year period, something like that. Very well. And you see a large shift to that unfavorable metal into favorability, and we see a big bull market usually in that metal. It happened in rhodium in 2016. Palladium had a massive bull market from 2009 bottom all the way till 2020. That's when I swapped it, at least. Silver's had some really good runs. I think silver's well positioned against gold. I would say gold's probably the least favorable of all the metals, or palladium would be, I would say. Palladium or rhodium would be the least favorable right now. And platinum being the most favorable. And some of the people, their questions are, when do I swap? How do you, what level? And I don't think there's any real solid, there's no solid, I'd say, like a methodical approach that'll work. You kind of have to go off the cuff a little bit. Remember that pricing is based off of the market conditions. And I think that the market conditions are definitely really good out there in the future for platinum. And there could be a setup where palladium, platinum, and rhodium all do very well in the years to come. So I would watch the ratios. And if there's a ratio where platinum's getting up 5.5 times, 5 times the price of palladium, that's getting pretty expensive. Something over 2 times the price of gold, it's getting more expensive for platinum. And then silver, if it's over 130-ish, somewhere in that range, it's starting to get more expensive. That's when I would start to look to see, hey, look, is the market conditions ending for a favorable platinum price condition? And remember, these things can all go up at once. They can all go up at once. Silver could get a rip your face off rally, and so could platinum. And I think the biggest thing here is, I buy it. I buy it when it's cheap, and I'm just patient and I hold on. It's really that simple. So that's the platinum game, and platinum, we're continuing to draw down inventory. That's the game. I've bought it, and I'm watching this draw down. And this is used in hydrogen, and I don't think there's any other battery solutions for very large vehicle transport. I think it's all going to be hydrogen based if we go to that direction of storing energy as hydrogen. I think it's also the most feasible. I know it takes energy to create hydrogen. There's an energy sink to it, but They're far easier to store hydrogen than a bunch of batteries and the mineral constraints with batteries. But that's my my take on it. Now here's gold. I really like this guy's chart, and that's why I shared this. It says it's finalizing correction and retest around 1730, 1735. Once retest successfully holds, then gold will move quickly to the next target of 1875. Meanwhile, you have to be patient, particularly throughout the present week. And what we have here is my favorite double bottom. You get the lead-in pattern, the double bottom. You get the little head and shoulder guy with a dropout of a slingshot type pattern. It slingshots higher. We come back and do a retest, and we're right at that retest. And this is why I like the physical metals. I like platinum. I like silver. I like gold. They all look really good right here. And it's not just this pattern here. A lot of different commodities have this double bottom pattern. Rare earth metals has it. A whole bunch of different areas have it. So I'm seeing it all over the place. Even housing has it. So we'll see what happens. But I think this chart looks incredibly good. Incredibly good. And remember, charts are we're using patterns to identify herd mentality. It doesn't mean that we'll be 100% right. But what's at our back is that we are cheap in a lot of these metals, materials. We're early in a bull market for commodities. And we should be looking for these types of pullbacks to be looking at potential investment opportunities. It says something's fishy going on, and whatever it is, it stinks, and it's at the Wall Street Journal piece needs to be investigated. And what happened here with oil? Oil this morning, it got smoked to the downside. Even I was like, what is going on? And I guess there was some news that was released that OPEC was going to increase their production, and it came out of the Wall Street Journal. So I guess it was false news from what I understand. And a lot of people are like, what the heck is going on here? So if you guys bought that pullback there, good job to you. I think it was a great buying opportunity. The charts look good. We've got nice big wicks at the bottom. It looked to me like we were trying to bottom to begin with. And it was surprising to see such a large down movement. And then throw in that gigantic reversal midday. And this was, I guess, the reasoning of why that went down so much was this news that came out. And I guess it's incorrect. So this guy says oil is cyclical. History proves that. Why would this cycle be short-lived? It has all the ingredients to be long and severe, especially with the underinvestment and all this other stuff that has happened. So I agree with that. It's going to be a longer cycle. It's not going to be short-lived, given the structural deficits and the underinvestment that we have in this area. This is cash levels. It's now climbing to C19 levels. What happens when this comes rushing into the market? And this is AAI's, it's cash allocation levels. And a lot of people are out of the market in cash right now, worrying. That money usually swings back down and money comes back flooding into the market to increase it. So when people get scared, money goes to the sidelines and they'll say, I'll just park money in this, park cash on the sidelines. And then when people get more confident, that money comes coming back in, bidding up prices. What I'm just saying here is that the money's on the sidelines. A lot of money's on the sidelines right now. This guy says Yeti. I guess he faps to fake oil headline, uses his opportunity to dunk on the bulls, immediately gets face ripped off, blocks everybody he tried to clown on. I'm sorry. I just thought that was funny. Had to share it. It says, people giving me crap for thinking oil prices could go to $200. So at risk of looking like a fool, yes, I still think it's possible we will see $200 oil. Let's say within 3 years. Obviously, there are things that can derail, but I think probability is good. If it can happen with coal, and then he lost. We're in the crazy inventory supply situation with the Chinese economy being the worst in decades. Bring back China and what happens? Even with super high rates, we really haven't seen that big fabled demand destruction like we've heard about in the West. And Josh also says, I'd be surprised if oil doesn't go to 200 plus this cycle. Inflation adjusted all-time highs seem reasonable. Completely agree with all of what they're saying. I am definitely in the 200 plus oil camp. It highly depends on the market conditions on how high that will necessarily go. If we get a big move where they need to, I'll say, loosen monetary conditions for whatever reason there is, it could be interest rates and the interest rate payments. I don't know what it is, but if they have to put money into the system for any sort of reason, that is inflationary. That inflation is going to find its way towards oil. Oil is the number one commodity. It's the master commodity. It's going to find its way there. And I think it could drive it to even higher levels than what we are thinking of 200, maybe even over 300 or 400 or 500. I don't know what the inflation will be in the futures, but we'll find out. Here's another one. It's on gold. It says it's ready to overcome a 2-year resistance, which has been tested many times previously. On a successful breakout, gold could advance as high as 1975 within a very short period of time. And this is that resistance line. We talk about resistance lines. I talk about it a lot in the Platinum membership on kind of how to read some of these charts, how we want to buy off support levels. And that's that dotted line here. You buy off the support levels, and then you wait for this resistance. You usually get you hit your head on it, and sometimes it comes back. Maybe it does a U-shaped pattern. This one's kind of that U-shaped pattern that I see that you get a break. It'll come back, and we don't want it to come back as far as this guy. We want it to stay kind of shallow and then break. I think this is a possibility here, and I like the way that he charted this. Looks very like a very good chart. Here's Heinrich Zerberg. He says, someone else says, he says, we're in a disinflationary period. The Fed will pause after December meeting, sending stocks to the moon until deflation takes place. And he says in quarter 1-2 of 2023. I don't know if this timing is necessarily right here, but I think the order of operations is right. I think that we have this large stimulus that came into the system, very inflationary. I think that we'll see a period where the inflation isn't as intense, which is a disinflationary period. I agree. And then I do think the Fed will pause their interest rate hikes at some point. Now, is it going to be this fast? I don't necessarily know. This seems very quick. And if I were to put something on it, this could be a little bit out into the future, but I could be wrong there as well on where the deflation deleveraging comes. But we should see that deflation, and that will show up in the housing starts and the delinquency of payments. That's where it shall start. We're going to watch that together on this channel. We're going to watch on it as well on the Platinum membership. Harsh Facts says, Cuppy says, the best part of thinking for yourself is not having myocarditis. Basically, they're saying, if you can think for yourself, you're not going to get the shot. And if you didn't get the shot, you're not going to have myocarditis. I just thought that was funny. Canadian real estate nearing the bottom, says this guy. And I don't know, he's crying, laughing. I don't know if this is a joke. It says, more signs of the beginning of the end of Canada's housing thing. It says, the worst of the falling sales and prices may be behind us before you get too excited. I don't have a huge stake in this. I just wanted to share this with everyone. Now, this is more information here. So Saudi energy minister says the current cut of 2 million barrels per day will be maintained until the end of 2023. If additional measures are required to balance supply and demand, we will be ready to intervene. And that news that came out that they were going to produce more was actually fake news. Pretty crazy. It says, got oil. This is Josh Young. It says, Russia reiterates that it won't sell oil to price cap nations. And this was the exact scenario that JPM said would send oil prices above $200 a barrel. And this could potentially come. It says, China signs. Now this is a huge piece of news here. It says, China signs a 27-year-long liquefied natural gas contract with Qatar worth $60 billion. What do they know about long-term hydrocarbon demand that the stock market does not? With many natural gas companies able to privatize with just 4 or 5 years of free cash flow. These China is playing the long game here. They are playing this game pretty well. A 27-year-long liquefied natural gas contract because they know natural gas is going to go up, I think. So why not get it in contract? Why not stabilize a large amount from the Middle East here? And we've got these companies that are they're going to be debt free with they could buy back all their shares in a few years with their free cash flow. Incredible value there. Incredible value. It says crude oil release from the SPR was 1.6 million barrels for the week ending November 18, 2022. That is the lowest weekly release since February of 2022. 160 million barrels done, 20.5 million barrels to go. Year-to-date release from SPR stands at 203.1 million barrels, or 630,000 barrels a day. We are drawing this guy down. It is cliff diving from the SPR releases. We are eating through that oil. That is a lot of volume of oil that's being supplied to the market out of inventory. And at some point, that inventory won't be supplied to the market. That is your opportunity here because people are getting scared. We got the news that came out today in oil, pushing oil prices way down. And we're releasing strategic petroleum reserve still. I thought we weren't. I thought we were going to stop, but I guess they came back and said they're going to release more into December. So that's where we're at there. DXY, this is that retest that I was talking about during our daily updates. It comes on down. It's going to come back, do a retest, and probably head lower. At least that's my likely case scenario. I don't talk in absolutes. It's all in probabilities, guys. It says if OPEC raises their production quota by 500,000 barrels in December, how much more would they actually produce? They were behind 3.3 million barrels per day before the announced 2 million barrel quota cut. How much Russian oil export disruption are they expecting from supposed quotas? So even if they move their quotas, it doesn't do anything. It's just a quota. They're not actually reducing their or increasing their production. They could be tapped for all we know. It says, can you imagine a quicker death than having the U.S. government running the oil business? It says, as the energy crisis worsens, top Dems urge Biden to nationalize oil industry. We've got here, this is URNM. This is from Uselink. Casper, he's on the channel. That comes on the channel every once in a while. It says, the highest probability is a bit more pain before the gains. Confirmation of this route is if the bear flag breaks down. If we, however, can get above 7150 and start to negate the flag, we could take a quicker road upwards. Basically, we've got this sideways pattern. He's got a bear flag. It's this green line with the flag portion going across where we could break to the downside, finish this pattern, and move higher. That is down in the, this is the Sprott Sprott uranium miners. And this is the ETF, and we could go down to 50 potentially. So that's there as well. And obviously you want to be looking at bull and bear cases in both areas. You want to be looking at both sides. It says you made it when you can't tell the difference between weekends and weekdays. I love that. Long-term consistency is more important than short-term gains. I agree. And then I think we went over the Freeport LNG, 90% complete. That's December is when it comes back online, mid-December, and it's anticipated to be 100% up and running by March of 2023. So we're getting approximately 2 billion cubic feet per day of production will be achieved January 2023. So that's the update there in Freeport. This is the current market expectations for the path of the Fed funds rate. So we're expecting a further increase in the Fed funds rate all the way to about 5% or so in the middle of 2023. And where I think things start to kind of happen could be on this backside over here. We need to watch the housing starts. And the backside over here is where we could have some problems. Usually you don't have problems when the Fed funds rate is increasing and when it's flat. So even when you're back late in 2023, that's when we need to figure out what is going on with the housing starts. We want to continue to monitor that. If we see the housing starts drop off a cliff, which I'm not expecting, okay? I am indifferent, and I'm going to remain neutral on my opinions, and I'm just gonna look at the data and say, hey, look, what does this look like? If we drop down and they start lowering rates, that's usually when you get that deflationary, deleveraging type of event. That's when you need to worry. That's when we cut back on our investments. But now here's the thing. When this comes in here, and this commodities always do well, very well in a inflationary environment with increasing interest rates, or when they flatten out. That's when you get the big move. I think in possibly uranium, in oil, and hopefully, I mean, that's what we've seen in the past. That's what history has shown us. And we could see a big move here. Under these, I mean, this is the summer of 2023. That's when I think the markets are going to be ultra tight if they're not releasing from the strategic petroleum reserves and demand comes back up in America. And if China comes back online, whenever that may be, we could have one heck of a demand surge. At the same time, supplies getting cut back with oil from the strategic petroleum reserves, and we can also see that Freeport LNG will be open. So I think this is going to be go time early 2023 for a lot of these oil and natural gas investments. That's what I'm excited for. That's what I'm really excited for. It says, an ongoing splinter in my brain. How can society shift to a greater degree of electrification with silver anywhere near current prices? And we've got this setup. I think this setup is very similar to this setup here in 2008, 2009, where you kind of break out, you come back, and then I think we're going to have a launch at some point. This is the end of the cycle. So actually, you know what? I'm just seeing something here as I look. Let's log on here and look at silver real quick, just because I'm just curious to see something. You guys can see it real time with me. What I'm seeing is I could see a gigantic double bottom forming. I always see these little patterns as I look. We've got lumber there. So silver, it's coming up here. I'm looking at the future pricing. I'm going to take a big picture. Well, that's not the silver I want. Let's do this silver here. All right, this is the big picture view. And what you normally see in this is you go into these large consolidation periods. You see this, it usually goes into the valley of despair, and then you get this little like downward movement right here. That is that downward movement here. We get it compressed up, you go into the valley of despair, and what you have is you've got that double bottom, the breakout, the retest, and then the go. And that's what it's basically doing is you get this double bottom, the breakout, the back test, and then you get the go time. So I think that's right where we're at. And I'll try to clean this up, guys. So what I'm looking at is I'm looking at a fractal that's repeating. What I can do is show you that fractal real quick, just so you guys can see it. That is kind of like, you know, the full cycle is this full cycle, but it's kind of a pain to manipulate that. But if I take that there, and what I'm saying is that this cycle is this guy right there. This movement all aligns with this type of downward movement. Do you guys see that fractal there? If you see the fractal, please put it in the comment section. I see this fractal, but if I were to kind of like move it above or below, you know, this portion, this portion here is this portion there. When we look at the bottom here, that's the bottom here. This fractal there is this fractal there, and then we've got that last little move there. That's this little move there, and then we pop up, and then that is the big move coming. So I think that if you look at all these things, you look at the fractals, you look at what this is. A fractal is a repeating pattern on different time frames, and those fractals can be stretched out, they can be compressed. What I'm looking for is they can give us an indication of where we are in the bull market. We know the ratios are low. We know that we're cheap in relationship to other assets like Dow Jones and stocks and all that other stuff, commodities that is, and precious metals. We know that we're cheap to the monetary base. Gold is cheap to the monetary base. All of this stuff hasn't been priced in. So what we want to look for is the fractal. Is it compressed? Is it blown out? This one's compressed, which means it could happen very fast and we could see a very big move. I think we're prime to go in like everything. I think we're primed to go in oil, natural gas, in precious metals. Uranium could be coming up. Maybe we have one last little spill out. But does that matter? To have one little last spill out, get everybody scared, they want to sell their shares, and then we're gonna go. That's kind of what my feeling is and what I'm seeing in a lot of these charts. So hopefully you guys are hanging in there strong. Maybe you picked the bottom off in oil. Good job if you did. And hopefully we go higher here. We'll see. I haven't looked at even the aftermarket. Looks like I could look real quick. Looks like platinum's up $10. I think that we are about to head higher. I'm just checking real quick. Looks like platinum's starting to move on up. Silver's looking pretty good here for a move higher. Gold's looking like it's going to move higher. Remember, we have small down candlesticks. We're right on support. That's everything that I said during the daily update. Crude oil is looking a little bit better. We'll see where we go tomorrow. Natural gas is probably getting that little bloody nose, but everything looks good. Now it's just a matter of time, just waiting for the market and money flows to come back in. That's all it is. Investing is more or less a gigantic waiting game. Once you get pretty good at it, at least. And hopefully you guys are learning a lot through these videos. If you want to learn even more, we do have question and answer session. I have one Saturday at 7 a.m. Mountain Standard Time coming up this weekend. It's finding-value.com. You can show up there. I may even do some more training sessions. I'm trying to figure out a good time where I can fit this all in for all the other platinum members and basically open it up to a bunch of questions. You guys can ask questions about physical metals, what I prefer. I'm not like a special coin person or anything like that, but I know the bullion, the overall metals, I'm pretty good with that stuff and pricing, stuff like that. We also talk about charting. We talk about a variety of different questions with macro type picture stuff, when to sell, when to buy, what do the ratios look like, what do the charts look like, et cetera, et cetera. We also have a lot of good ideas on potential investments that are really early in their moves. If you're a patient investor, you can kind of get in real early. You get these patterns that break out of these bottoms, and they just ride them on up. We have had some very good success in a couple of I should say a good amount of energy service companies that I think we've gone into. Some have gone multiple hundreds of percents in a few months time frame, and I think there's a lot more to go in the future. Investing isn't about winning in everything. Investing's about having such large rewards, risk reward balances that you just knock it out of the park on 4, 5, 6 of your investments on a 10, 20 investment portfolio, or even maybe more. It depends how you structure it. And those big winners really carry the portfolio higher. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel if you haven't already. And I'll catch you guys later. This is Finding Value.